Hello, it's me. I see that Rhonda Green is first, and then LaHawk and Drake are in the chat already, and it's Q and A time. What's happening, man? Your boy feeling good again. I done got that Haruti do off me. I'm ready to run my mouth on Al Gore's internet. You hear me? It ain't gonna be no longer today because ain't nobody asked nothing. I got like a couple questions. That's it. I got a couple questions, and I'm gonna answer those couple questions. If I end up running my mouth a long time, I'll be here for a long time. If I don't, I won't. What I'm gonna do, I'm gonna drop the link in the chatteret just in case somebody didn't get a chance to see the poll on my IG page, because I don't be super active on IG no more. I don't know how many people still be tapping into my IG page, but I'm gonna drop the link in the chat, right? So if you didn't get a chance to see the IG question box, you can click on that link right there, pull up on the stage, and ask your question. Don't type no question in the chat, because I ain't gonna be looking at the chat for questions. If you want to ask a question that you didn't get a chance to ask in the Q&A box, click the link and pull up and ask your question. You don't have to show your face. You can pull up just like this. So I can't see you, but I can hear you. Let me see who in the chat. Rhonda Green is in the chat. Little Hawk is in the chat. Big Draco is in the chat. Kimmy Kim is in the chat. Erica Pendleton in the chat. Everybody in the chat. You love the song if you're in the chat. Hey man, let's get to it. Hold on. I gotta open my folder. A race of liquors are in the chat. McCutie up in the chat. Everybody up in the chat. Have y'all ever seen somebody lick erasers? There's an eraser liquor in the chat. Don't stare them right in the eyes. If when you pull up to the red light, and you see somebody over there with the I'm a homeless veteran, please help me, God bless sign, and you be trying not to make eye contact with them, then you start acting like the sun in your eyes, and you get the visor and you put the visor down and stretch it out so it pull out pat, so you're sitting there like you're trying to look straight ahead. Now that you really want to look out your window, because when you at the stop sign, you be looking over, trying to look at all the trash and the bottles and stuff when you're at the red light, you try to look over, see the trash and the bottles that's right there next to when you get off the expressway, and you be complaining about all the stuff that people be throwing out their windows, all the McDonald's bags and stuff like that. You really want to look over there, but somebody standing there with that sign. That's what you got to do whenever the eraser liquor is in the chat. You don't give them direct eye contact. No. What's up, Terry? What's going on, Terry? Of course, you know what I'm saying? The class clown, go against all the rules. Shout out T. Lewis. Joining the YouTube membership. I appreciate that. I'm not gonna read that comment out because this is a politically correct channel. Man, let me get to what I'm supposed to be doing, fooling around with them jokers. Jokers. I appreciate you, T. Lewis, for tapping into the channel memberships. Um we got 1, 2, 3, 4, 5, 6, 7 questions. 1, 2, 3, 4, 5, 6, 7, 8, 9, 9. It's the 10 commandments. What? Who remember that? Who remember that? Who in here old enough to remember that? Let's get to it, man. We only got 7 questions. That's all we're gonna answer. Unless somebody pull up on the link that's up here. Somebody pull up on the link. This link right here. Matter of fact, let me go to the tube and pin it to the top of the chat so that people won't have no problem finding it. I'm live. Shout out to T. Lewis. Signed up black spot. Shout out to everybody with the yellow icons, man. It ain't y'all see it ain't nothing but yellow icons in here, man. Shout out to yellow black spiders, man. All right, let's get to it, man. Let's get to it. Now the link is pinned to the top of the chat if you want to pull up and ask a question. Right? Question number 1 coming from Big Draco. What's the most challenging thing with being retired? Big Draco. Now, when you asking little Timmy Rogers, what's the most my sweetie said, sounded like she said not sleeping all day. I don't know. I can't negotiate, so I heard her say something. But for me, there's nothing challenging about being retired. Being retired from like a trading standpoint is beautiful because it allows me to get up at any time. Being that I trade futures, I can get up at any time and see what the charts are doing without worrying about, man, I'm gonna be tired at work tomorrow, man, because I can just get a nap if I need to. So there's no challenges. There's no challenges for me being retired, right? The I can't I just thought about something, and I'll be totally honest. The one challenge I face since I've been retired is doing too much. I do like I have the free time to do whatever I want, and I end up doing too much, and I don't have any free time, and I can't finish stuff. Like I'm supposed to be recording learning futures for beginners video right now, on top of the fact that I was sick, but I be doing so much I can't finish one thing. My I'm gonna close the chat. I'm gonna close the chat so I can't see it. I'm gonna close the chat so I can't see it. So that's my one challenge. Having so much time, I do too much. I do too much. That's my one challenge. Big Draco going again. Do you feel pressure while trading since you have retired? Since my sweetie is on here, I really hate answering this because I these are the things I don't tell her because I don't want her to worry no more. Hey, since I'm retired, a lot of times I feel an extremely heavy burden to make something happen. It's like it is very difficult for me to sit on my hands. And the reason being is I'm retired, right? And since I'm retired, like if I don't trade, I'm a trader. So if I don't trade, guess what that means? Uncle Sugar ain't giving me nothing. Now I'm retired, but that's just fancy talk for some black dude that's unemployed. Because if I don't trade, so that's the pressure that I feel with being retired. That's the pressure I feel with being retired. And I struggle with, you know what I'm saying? Do I want to continue to help as many people as I can for free, or, you know, start charging people for stuff? And I don't want to charge people. And, you know what I'm saying? Like, I'm constantly getting people asking me to, like, you know, do mentorships and do this and do that. And I be, you know what I'm saying? I be kicking the can down the road, because it's like, before, when I, you know what I'm saying, try to put it out there for the one-on-ones, like, everybody say they want it, but then when I start going full throttle in it, all of a sudden don't nobody want it. And then I'll be like, see that, like, because when I, anyway, that's the pressure I feel being retired. I feel like I got to do something. It's hard for me to sit on my hands, because if I don't trade, I don't get paid. Kashaya. How have you been, Tim? Update on you and how the market's treating you. Well, update on me. I'm here. Nothing much has changed. I don't know how far back you have not been pulling up every day, Kashaya, but I only trade I day trade futures. That's all I do. Every blue moon I might take an options trade, but I primarily trade oh, let me share this. I am on a mission to secure $1 million in funding under 2, maybe 3 different prop firms. Right now, I'm doing eval and PA accounts through Apex. I have a link in the description below if you want to, you know, they're having an 80% off sale right now. So if you click that link, it's affiliate link, and anything you sign up for, I'll get a small commission off it. So go ahead, and if you're a profitable trader, if you're a consistent trader right now and you want to dip your toe into funded accounts, try Apex and use my link, will you? Thank you. I'm on a mission to do that. I made a decision today that the second company that I'm gonna diversify off into is Top Step. I dropped a video about that today, asking if y'all want me to, depending on how the poll go on IG. Right now, the poll is like 90-something% for yes right now, but depending on how the poll go on IG, the very first combine that I sign up for in Top Step, I'm going to document it from start to from start all the way through first payout if I pass it. So start now. Since I'm going to be documenting it, I'm going to be doing it very I'm be doing it I hate to say safe, but I'm going to be trading it just like I trade a PA account or a personal account. So I'm not going to be risky Randy like I usually do in the eval phase. I'll be like over leveraging, doing crazy. So I'm going to be trading it like very conservative, since I'm going to be documenting it, because I don't want to, you know what I'm saying, share anything that's, you know what I'm saying, not quite right. So documenting what I'm going to do in that, I'm going to be sharing like my analysis, what trade ideas I have. I'm going to be recording all of this, and then like if it plays out during the New York session, then I'll be taking the trade. If it don't play out during the New York session, you'll see me saying, okay, that idea fleshed out during the London when I couldn't take it, or I took it during the London, or it fleshed out at a time I wasn't trading. So now this is what I'm looking at. If it come back, then you know what I'm saying. And if it don't give me an opportunity, I'll be like, I ain't getting no opportunity. You know what I'm saying? But and I don't know how often I'm going to share the videos, but you know, if it come out, everybody saying they want to do, because I feel like it'll be helpful for somebody to see, not just, hey, I got a funded account, hey, I passed it, hey, because I believe that, well, when I was learning how to trade, I learned all this information, but nobody could teach me how to execute. So I feel like if you see somebody going through the whole process of analyzing the chart, deciding on what they want to trade, executing the trade, good or bad, it'll give you a feel for, hey, this is how you really do it. So depending on how that go is if you see it. And other than that, life is gravy, man. God is still good. My wife is still amazing. My kids, they're my oldest son almost tall as me. Calandra's the shortest person in the house now. Life is great, man. The market been treating me like the market treat everybody else. It don't care nothing about me. You got to trade what you see. Thanks for asking. Rhonda Green. Rhonda says, I look at the ES versus the Dixie. What is the next best ticker to compare the ES movement against? Well, Rhonda, I look at the ES versus the Dixie also, but I don't put a lot of weight on it. And the reason why I don't put a lot of weight on it is because the ES and the Dixie are not like lockstep inversely correlated. You get a feel for what the market may do, but since it's like so much manipulation, it's like the cracking correlation don't always translate the best. And what I mean by that is like, and so what I do, I look at the NASDAQ, the NQ, in the YM, in the Dow, because they are correlated, so they should be moving the same. Like when when one of the three indices go up, the other two should be going up. When one go down, the other two should be going down. And so with the dollar, they should be inverse, where when they go up, the dollar go down, but the dollar is like directly inverse correlated with currencies. And those be like almost a mirror image. But it's so much manipulation. If you notice, like even today, the Dow was like screaming straight up all day before the Fed announcement, and the ES and the NQ were like up and down, up and down, up and down, but the dollar was just going up, up. I mean, the YM was just going up, 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 up. You know what I'm saying? So it's so much manipulation, like, and the manipulation creates chop. You know what I'm saying? The manipulation, the divergence, it creates chop. So I use the NQ and the YM because those are correlated and they should move in the same direction. And when you start to notice that the NQ, the NQ is my favorite one to use looking at the ES, but I look at the NQ and the YM, and I look at all three of them together, and I look to see, hey, are two of them making higher highs? You know what I'm saying? And I usually look at it on the hourly time frame when I'm looking at the three. You can look at it on any time frame you want, but I usually look at them on the hourly time frame. And I'd be like, are these two making higher highs? Are all three making higher highs? Are all three making lower lows? Is this one making lower lows? And I ain't talking about candle by candle, like over, you know what I'm saying, over a few hours, you know what I'm saying, over a few hours to even a day, like the major swings, like when the market make a major swing up or down, did all three make that high? Did all? So yeah, that's a long way around to say I like using the NQ and the YM And I also look at dollar to get like a feel for risk on, risk off, to like help me with the narrative. If I'm bullish, like that's what I use the dollar for. I use the dollar for if I'm bullish or bearish, and then like, is it a risk on or risk off? And dollar dropping, I can't remember. Dollar going down is risk on, I think. Dollar going up, risk off, or dollar going up, risk on. Whichever one it is, right? I always got to go back and look at it whenever I want to know, right? I always got to go back. If the dollar going down, then that means it's risk on. So the index is gonna go up. If the dollar going up, is risk off. So the index is gonna go down. Yeah. Yeah. There you go. If I said it wrong, I jalapize. Flawless allure. Flawless allure says, I'm struggling identifying order blocks and breakers. Help. Hey, I went in slow motion just did. Did I go in slow? Did I glitch? I'm reading this like this because it says flawless allure, and I'm hoping that this is not a man with a username of flawless allure. I'm struggling with identifying order blocks and breakers. Help. Oh, hold on. Help. Okay. Let's go to the charter art to help with this question. Right? Oh, wait a minute. You know what? I got a whole what's the name? Let me see. ICT concepts part live part. Which one is this right here? Let me see what this is. ICT concepts. Want to avoid? No. Uh-oh. See, this is the one I was supposed to be recording. I was going to record today, but I didn't. Rejection blocks. Nope. Mitigation blocks. Breakers. All right. So, for breakers, right? For breakers. Now, the one thing that oh, that's Mo over there. Mo. It's if you still there, Mo, it's the new TLR. YouTube.com/the new TLR. Yeah. So if you still there, go over there. I'm sorry, Mo. It's youtube.com/the new TLR, and that'll take you to my page. So this right. This is what used to mess me up the most when I was trying to learn breakers, right? Because I was sitting up there, you know what I'm saying, trying to do it the way everybody and their mom. I was trying to do it the way Lex was trying to tell me how to do it. PDub was trying to tell me how to do it. I was trying to do it the way everybody was trying to tell me how to do it. And so I just went back to the way that ICT taught me how to do it, right? The easiest way for me to see it, right, is for to look for the little triangle shape like this right here in price action, right? Looking at the little triangle shape and price action, right? When you go up, down, because I was trying to learn the whole low, high, lower, low, higher, high, and was trying to look for it at every swing low and swing high and all that right there. That's where I was driving myself crazy, right? So then I went back to the ICT basics and I just looked for the little triangle shape like this right here, right? Once you see that triangle shape like that right there, then it take off. Now, right? Now, this was the other part that was getting just being able to see it. That's what was getting me, right? But right. Let me see if it say it in here. Let me see. Talk about a bullish order block. Rank counters that most recent swing high prior to old low violate the seller that when price return, this is a bullish setup. Consider okay. It don't say it in there, right? Let me show right here. Okay, here we go. I got it spelled out good on this right here, right? This piece right here, this, when you identify, for me, when you're identifying a breaker or an order block, right? This right here is the, I got dog it. Come here. This piece right here is the most important piece of the freaking puzzle. You want price to come back to an anticipated point of resistance, support, reversal, whatever you want to call it, right? You want price to come back to an area of anticipated support. You want it to come to a destination. You know how we say it, when it comes to the destination, you want it to come to a higher time frame destination, right? Once it gets to that higher time frame destination, then you start looking for the rest of the characteristics that make the breaker, because the breaker, the order block, the mitigation block, any reference point on the PIM chart, right? I know we talk about breakers, but it's not just that simple. It's not that simple. Right? Anything on this PIM chart that's not a imbalance. So a mitigation block, a breaker, a order block, rejection block, anything dealing with order block theory, right? It has to be linked to a narrative, right? I keep going to slow motion, so hopefully I'm not glitching. It has to be linked to a narrative. So since you want it to be linked to a narrative, you want to look for it when you come up on an area of anticipated reaction, right? You want it to be a point where you anticipate resistance, a point when you anticipate a reversal, a point when you anticipate support. You want to wait till it get to that point, right? So now, in this case right here, we come up to a point of anticipated resistance or reversal. So let's just say we're coming up to a daily order block. We're coming up to a daily high. We're coming up to a daily fair value gap. We're coming up to a weekly high. We're coming up to a weekly fair value gap. We're coming to a 4-hour breaker. We're coming to a 4-hour mitigation block. We're coming up to any higher time frame destination, right? any higher time frame destination, right? I like it when it's a higher time frame high. That's when I find the most success with my breakers. When I'm coming to a liquidity pool, right? So we get there, right? And then we have a reaction, right? Boom. Reaction, right? Then we go back up, and this low breaks this high. That's the key to the breaker. See the upside down V right there? I mean, see the V. I said upside down V. See the V, the upside down A, just like when it's bear bullish, it's going to be a V, right? The V going to have a long leg. It's going to have a long leg over there. Or the A going to have a long leg. The V going to have a long leg like that. You know what I'm saying? The V got a long leg, a long arm, and the A got a long leg, right? So it comes down, goes up, right? This low breaks that high, and then we sell off and get a break in market structure right there. The breaker leg right here, you're focusing on the last down close candle or series of candles, right? But the main focus is on the last down close candle of the price leg that went up and broke the high. That's where you get breaker from, right? It went up and it broke that high, took out some liquidity again after taking liquidity. That's the ones I like, when it take the liquidity, react, go up, break, and react again. It's all about the displacement. You're looking, see these candles here? Heavy reaction. Heavy reaction. You're looking for that reaction. Why are you looking for that reaction? Because inside every breaker, you will find an old order block. An old order block inside every breaker. Now, and you want to look for, now, speaking of that, you talked about order blocks. With order blocks, right? It's the same thing. You want to come to an area of anticipated resistance, support, somewhere where you anticipate price to possibly reverse, right? Possibly reverse. Doesn't always have to be a reversal, right? It can be a you can have a continuation order block also, right? But you want to come to that area. I'm using the same thing in the breaker, but you know what I'm saying? You'll get the picture, right? So let's come over here. We're going to focus on this we're going to focus on this green candle right here. Matter of fact, we're going to focus on this green candle right here, because whenever you got like this time distortion right here, right? Whenever you got that time distortion like that right there, you want to be very careful with, I call it time distortion. You want to be very careful when picking the right candle for your order block, right? The right candle for your order block, right? So, when you come up, right? You come up to a point of anticipated resist, like we had a point of resistance here. We came up, we hit it, right? To say we came above a high, right? This is your new high right here, right? When we come down there and we come back up to it again, when we get back up to it again and we react off, see this reaction right here, right? Now, when we got this consolidation like this right here and we react at the end, I look at all like this count. They say this candle, this red, green, red, green. I look at all of those right there as time distortion. And in my mind, I take this displacement lower and I scoot it all the way over to like when the high came up. Like I'll take these candles out, and in my mind, I just take these and scoot these over here and say, okay, we went up, we came down. And right there is my order block. You come up, to an area of anticipated resistance or reversal, right? For the reversal order blocks, right? You reverse. And when you break the open of that candle, the last up close candle, when you went up to that anticipate, you're going up to that anticipate. You want to go up to that anticipated area of support or resistance or reversal. And then you have a shift in sentiment, right? When you break through the open of that last up close candle going up to that area of anticipated resistance, right? That is your order block right there. When you pierce through that opening price right there, right? And then the time distortion, like I said, I just scoop this over to the right because we just engineer liquidity right here. We're just engineering liquidity there. You know what I'm saying? From that 1, 2, 3, green, red, green, snatch them out, right? Slide these over right here. Matter of fact, green, red, and just attach this red one to that red one. There you go, right there. Right? That's how I do it in my mind. Time distortion, right? And everything I'm talking about, anything dealing with these PD arrays, you always want to look for them during the algorithmic trading times, aka the kill zones, right? Now that we done looked at it on the slide, right? You always want to look for it during the algorithmic trading times, right? Let's see if we can find a, you know what? ICT was talking about a breaker today on the NQ, and if I'm not mistaken, I think it was a continuation breaker, because I was listening to a Twitter space today, and he was talking about a breaker on the 5-minute, and I think it was a continuation breaker, and it was, and it was the night before Christmas. No, it was a breaker. It wasn't an order. I said a continuation breaker. I was thinking it was an order block, but it wasn't a. Okay, this right here would be an example of a continuation, and this right here, these right here would be examples of continuation order blocks, right? This order block here, this and this order block right here. Those are continuation order blocks right there. Now, explain, Tim, explain. I've explained the reversal order block, right? Bullish, flip it on his head for the bearish, right? Flip it on its head for the bear, like this right here. This is a bearish order block right there. Right there. Right? We came up to that order block right there. Boom. Sold off from it. Right there. Price went up to this area of anticipated support. We came down. Let me squash this up a little bit so you can see what I'm talking about. See, we right here, we consolidate, and sell off, right? Price pushed back up, right? When we pushed back up, we came back up into this area here, anticipating resistance here. Pick a reason in here. It's a million in there. We anticipate and resistance right there, right? Came up, boom, sold off. This right here is your order block right there. That's your order. This is a reversal order block. Came up, resistance, sold off, displacement, come back up to it. Wicks went above and took out buy side bodies, respect the order block, and we come back down, right? That's a reversal order block right there, right? Price is going up. The last up close candle right there. Now, a continuation order block, as I call it, right? Price come down, right? This line right here is an old low. Came down to an anticipated area of support. Come to it, go past it. Who cares, right? Got to the area of support, had a shift in sentiment, right? Came down, shift in sentiment, and then we broke the open of that candle right there. That qualifies that as an order block. We kept sliding, right? If you ever, I heard Michael talk about this today. I'll speak on it here since I got you here. This is the same thing. Well, Tim, what's your anticipated area of support there? See this 1.5 extension on this fib right here, right? Y'all remember the other day when I was talking about how far can it swing? Let's do it for Rocky. Let's do it for Rocky. Let's do it for Rocky. Let's do it for Rocky, right? You come down, set a low, you take off, right? Once you take off, how far can it swing? How far can it swing? One more time for Rocky. You come up, how far can it swing? That's why we run the Fibonacci's like that. You take the Fibonacci from the high to the low. See, this is the displacement leg, right? You got your displacement leg, right? And when it starts to go back up, filling in an imbalance, maybe even taking out a high, right? When it goes up, how far can it swing back down? So you run your Fibonacci's from the high to the low and use your fib extensions to see how far it can go. See this 1.5 deviation right there? That's a target. That's an area of anticipated support, an area of possible reversal, an area of something, right? Got there, shift in sentiment, break through that opening price. That's an order block right there. See the displacement afterwards. Now, hopefully I was able to explain breakers and order blocks a little bit better. Just like this right here. This is a breaker, right? We engineering liquidity right here, right? We get heavy displacement down, right? Got heavy displacement down right here. We right there, engineer, right? Right there, we're engineering liquidity. We're at an area of support or resistance, right? Because we're engineering liquidity. We're at an area of anticipated support or resistance. Pick whichever one it is. I don't care. We're there, right? We're consolidating. We're engineering liquidity. We get displacement and they're off, right? And they're off. Ripping, right? Got a bearish order block there. Got a bullish order block here. Then we rip down and break through there. This low broke that high. Then we got a break in market structure right there. This right here is a bearish breaker. It's actually, you know what I'm saying, all three of these candles right here. That's your bearish breaker, all three of them. But look how big and beefy this candle is right there. This is where the most conviction of the institutional funds were. Look how huge that candle is, right? And so this is a gem that I picked up from Michael today, right? Remember how I always talked about ICT would get short, like once the breaker was formed, he would drop down to like a 1 minute and get short up in this area right here. Then price would come down, and then when it came back to the breaker, he would add some more. But that's how he was teaching us how to get in on the breaker over there. When it came back to the breaker, he was teaching us, hey, you know what I'm saying, this is the safe way for you to get in. This is the more advanced way to get in over here. Let me break it down for you today, what he said in his Twitter space, right? Once this breaker is formed, remember, everything on the PIM- chart, if it's not an imbalance, it needs to be aligning with what the imbalance is to. But the reference points, the breakers, the mitigation blocks, the order blocks, they need to be aligning with a narrative, right? The narrative is, I'm going down, right? The narrative is going down, right? We engineered liquidity, heavy displacement to the downside. That's the algo tip in his hand. I want to go down, right? Left a beautiful imbalance up here, right? Came back up, repriced the imbalance, took everybody and their mama out that had stop losses resting right above, right? Anybody that had stop losses resting right at the high or a little bit above, took them out, right? And once they came back down, right, created this breaker, right? So that price right there, that's your breaker price right there. Bearish breaker close, right? That's your breaker price right there, right? Once you come down and you break through that price, that's your breaker price right there. We're going to call it 15,307.25, right? That's your breaker price. So if this is your breaker price right here, right? If that's your breaker price right there, when we get to the kill zone, right? That's 3 o'clock. That's 4 o'clock, right? So as soon as we get to the kill zone, when price touches 15,307.25, you can go short, because in a high moving day, this is what I got straight from the horse's mouth today, because a lot of times I would be sitting there left at the bus stop waiting. Just for example, when price came down, if I was waiting at this breaker, I would have got left at the bus stop right here. And I'll be like, why am I getting left at the bus stop? Well, I learned today why I'm getting left at the bus stop. You don't have to wait for it to come trade away and come back and retest the breaker. No, you don't. You can do it off of first touch inside the kill zone. You don't have to wait for it to trade away, because the narrative is I'm going to attack this low right here at the minimum. There's a low right there that I'm going to attack, right? I got a standard deviation down here that I want to see us swing to. You know what I'm saying? This pendulum point, how low can you go? That's a measured move. I want to see it go to at least there. This is the low. This is the minimum, right? This is your direct amount. 15,233 even is your direct limit order amount below that low. That's the deviation below that low. If you're just going to that low, that's your direct target up right there. 15,233, right? Because you want to use the deviation that's on the opposite side of the low or high that you're watching. The standard deviation move, this is the low hanging fruit that you want to get to, one measured move away, right? So you enter as soon as the kill zone is active and it touches that price, you can go short. If it doesn't reach the low prior to coming back to retest it, you can add more. If it touches 15,307.25, add more. If it comes, add more. And then it sells off. There you go. Bob's your uncle. Hopefully I didn't confuse anybody on that. Let's move right along, because I've been on here forever. Finding Superman says, does this mean you will not be doing the future trading series from beginning to end? No, it does not. I still will be doing that. This is the very first one that I supposed to be recording, and I haven't recorded yet. I was going to record it today, but I got caught up cutting out these little squares for this right here. Last question. How do I know when liquidity is taken, whether we will retrace and continue or reverse? The short answer is displacement. The displacement will tell you what the algo wants to do. Now, let's go to the chart. Let's just stay right here. Since we here, let's just stay right here. Let's just stay right here. Right? Now, Remember, everything starts with the narrative. You need to have a bias. You need to have a draw. Bias is a hussy that's for the streets. So you need to have a draw. You need to understand where is the market trying to get to. Understand that the market is constantly seeking liquidity and balance. Liquidity and balance. Liquidity and balance. It's constantly looking for liquidity and balance, right? Get in tune with the algorithm and understand what liquidity pool is it after. Once it takes a liquidity pool, right, look for displacement, right? Look for displacement once it takes a liquidity pool, right? Let's just come here. We got liquidity resting above these equal, all these equal highs up here, right? Liquidity resting above this consolidation, all these relative equal highs, right? Right, especially when the bodies are tight like that. When the bodies are real tight like that, whoo, juicy. You know what I'm saying? Because the bodies is the main part. The wicks just do the damage. The bodies is telling the story. So it's a bunch of liquidity just even from these bodies right here. See all these bodies over here? All these even bodies, all these bodies, all these bodies. Look at all these bodies. Matter of fact, let's just move this line over here to all these relative equal high bodies right there. Right? All of those equal high bodies right there. Right? So when price poke above that right there, right? Now, the narrative is in this case right here, the narrative is the market wants the market wants to go down. I've been talking too much. Hold on. Why is the narrative that the market wants to go down? Because we engineered this liquidity for all of this time right here, and then we got heavy displacement down to the downside, right? I know what you're thinking. Tim, we just ran sell side. I'm glad you said that. Let's come here and mark this out. That's why I told you it's all about displacement. It's all about displacement. Right? Okay. So we engineered. I did the wrong thing. Buy side. Let me make this bigger so y'all can see that good. I'm sorry. Okay, so make this blue. I'm sorry. Make this blue. And we're going to pull out Picasso. What's up, boy? We ain't seen Picasso in a minute. Picasso. So we're going to put Picasso right down here. Right? So why is Picasso down here? Picasso is right here below this blue line because when we engineered this liquidity, we got heavy displacement down here, right? So we came and we took out sell side right there. But this displacement here, after leaving this consolidation, right? After leaving this consolidation, goes in line with the current narrative that we are bearish, right? How do you know that? Because when we came here and took out the buy side, we displaced down, came up, displaced down, came up, displaced down. We're continuously taking out sell side and respecting the premium PD arrays. So we're in a bearish trend right now, right? So when we come here and start to consolidate, we're engineering liquidity, right? We're engineering liquidity to see which way we go, right? We're in a bearish sentiment right now, a bearish trend right now. So this move right here on this 2 o'clock candle validates the bearish bias, the bearish draw. So Picasso resides right there because this candle this displacement validates the draw, right? So if this displacement validates the draw, right? When we come up here, this right here is just a Judas swing, right? It's leading people the wrong way, right? Because the draw is down here, right? So what do we say when we're when price going to do? Price is going to expand, retrace, and deliver, or it's going to expand, reverse, retrace, and deliver. All right? Remember that. Remember that. That's all price going to do, right? So we're anticipating price to come down here. We get the displacement low towards the draw. So now we're just looking for an opportunity to get short, right? Looking for an opportunity to get short. Now, you got an imbalance here, right? Mind you, now all this right here is like a news day, so it's going to be some manipulation in here, right? So this is just me speaking my opinion right now. On a non-news day, non-FOMC day, I truly believe that we would have stopped at this imbalance and went back down. We would not have gone up and taken these traders out right here. But since it's a manipulated day, we went up and we took traders out right there. But what are the rules? You shouldn't be trading during this FOMC time anyway. From 2 o'clock to 3 o'clock, you should not be doing any trading because 2 o'clock here are the numbers. 2:30 is when the press conference. So from 2 o'clock to 3 o'clock, you shouldn't be doing no trading. So you should only be looking for setups from 3 to 4 on this day. But if this wasn't FOMC, I truly believe that we would have just gone back up into this imbalance, maybe no higher than this order block, and then came back down. Those are my true beliefs on that. But that's how I determine when liquidity is taken, whether we will retrace, continue, or reverse based off the narrative already in place. The displacement attacking the liquidity is the clue with the displacement, right? We were expecting to go lower. So when we attack these lows, right, that let us know we were going to continue down because the displacement was in the direction of the bias. Now, once we attack it, you just look for your setup, right? We retraced back up into the imbalance again because it was FOMC. It manipulated and took people out. Where did it get above all of these equal highs, these equal body candles, and these equal highs right here? So when we drop down like this right here, anybody that had their stops up here, right, they felt safe to trail their stops here. Why? Because this is heavy, heavy, heavy resistance. Look how many times we got up to it. Look how many times we hit it. Look at, and then we went up here, we took them out, right, and dropped back down. And once we went up there and took them out, somebody said, "Ooh, I can move mine down here again." Then we came back and took them out right there, like a dirty dog. Went to the tick. Boop, give me you two. Boop, give me you two for moving your stop so fast. And then they took off and went down. That's all I got, man. Hopefully I was able to help somebody. Hopefully I was able to help somebody. Meet somebody. Let me look see what's going on in the chat. What's up, E-Rock? When you pulled up in here? I don't know. I've heard the ESYM. Have you ever looked at them too? I said that. I think the transparency will be very informative for those interested in how prop firms work and how trading. Okay. What's up, SJ? Dollar down, market up. Dollar up, market down. Yep. Oh, that's Erica. Okay, then, Erica. Flawless allure. Put him on notice. What's up? What's up, CZ? What's up, CZ? Since candle C broke the high of candle A, is that a rejection block? No. A rejection block is like long wick candles when you get up there to an area of support or resistance, and then you have like real long wick candles, and then have like if it's more than one candle, it'll be like equal bodies. It'll be like equal bodies. Like, for example, this area right here. If you're looking at like this right, if you're looking at this right here, like something like this right here would be a potential rejection block right there. Right? Something like this would be a potential rejection block. Right? Because you got these, you came up, right, to an area of resistance, right? Rejected off it, then sold off heavy. We got displacement down right there, right? After coming up to this area of resistance. These long wicks right there. So it's a potential rejection block. So if price was to come back up and get above these bodies right here, get above them bodies right there, you'll be wanting to see it get no further than like halfway up this rejection block before proceeding back down. But you know, so like C breaking A, that's in the scheme of like mitigation blocks or breakers, you know what I'm saying, and all that right there. B, C either gonna break A or don't break A. The difference between the breaker and the mitigation block. Yeah, Rocky been silent. Yeah, that's it, man. That's all I got. Anybody got anything for me? Anybody got anything for me? Remember, the link is pinned to the top of the chat if you want to pull up and ask a question. But that's all I got, man. Appreciate y'all for tapping in with your boy. We've been here for an hour. I didn't think it was gonna be this long, but I got to run in my mouth. Shout out T Lewis for pulling up, joining the membership. Shout out my sweetie just for being my sweetie. All right. Shout out my sweetie for just being my sweetie. Shout out Big Draco. Big Draco was the one that gave me the formula for working these prop firms. Shout out Big Draco for giving me the formula to work in the prop firms. Appreciate you. Shout out to everybody else, man. Shout out Taryn. Shout out Taryn, the super chat queen. You know what I'm saying? Shout out Rhonda. Rhonda, I think Rhonda take more notes than Michelle Tucker. I think Rhonda take more notes than Michelle Tucker. Shout out Rhonda be putting in that work when it come to doing this trade and stuff, learning this trade and stuff. Shout out Robinson for always getting on my nerve. Um, Shout out Kev for being the class clown. Shout out everybody, man. Everybody else on this live. Lil Hawk, Find a Superman, Kim, CZ, SJ. Who else on here? E-Rock. Who else on here? Everybody that's on here, man. If I didn't say your name, I jollipies. If I did say your name, hey man, you happen to be in my line of sight. I think that's all I got. Yo, Tim, is it a rule to not trade till an entire hour after FOMC? Hey man, you make your own rules. You make your own rules. You know how you figure out your rules? You go in and you back test your model. You go and you back test your model through every scenario of the market, right? And then you sim trade your model through every scenario of the market. And then you will know, should I be trading during this time? Should I be trading during that time? Should I be trading? If your model, the data from your model supports not trading until an hour after FOMC, then you shouldn't trade until an hour after FOMC. If your model dictates don't trade before FOMC, you should not trade before FOMC. Whatever your model, the data collected from your model dictates, that's what you do. No one can make the rules for you but you. Stick to your rules. And life is gravy. Break your rules. Headache City. You're very welcome, Rhonda. Have a good night, SJ. I got it in my mind not to trade till 15 minutes after news releases. It don't matter what's in your mind, what your data say. What does your data say? Sounds to me like you heard somebody preaching a sermon and then you took it as the gospel. Every sermon that you hear on the internet ain't the gospel. Those things that you should consider to be your trading gospel are the things that you can prove, the things that are fact. Go back through the data. What does your model say? If your model says don't trade until 15 minutes after a press release, do that. But if your model don't say that, don't matter what you got in your head. What we got in our head can be the worst thing for us. We are humans. Let me speak on this. Let me speak on this. Today, I was listening to us. I got on Twitter, right? I was just going on Twitter just to see if I could see something funny. And I saw a notification from Michael, right? And I clicked on it. It was a trade that he took, right? And while I was sitting there looking at the trade, I'm looking over on the side, looking at the. Let me show you what I was looking at. Let me show you, because it got up under my skin. This is the kind of stuff that be making me want to just quit the internet, right? It got so deep under my skin when I saw this. And then while I was on there, is he gonna beat up, slap him? Pause, 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 sleep. 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 Oh, sorry, y'all. Okay, so and then while I was on there, I let me see. Right there. This comment right here. I don't know if y'all can see that, right? So when I opened it up, I saw them listening to it. And while I'm listening to it, this comment right here pissed me off, right? And showed him take a short, right? Let me see if y'all can see this. Y'all see what I say? Over $10,000, right? It got up. See, it's like over. It was like teetering between like that right there. Say 11,260. It was teetering between $10,000 and $11,000 when he went over and closed it. Boom, right there. When he closed it, right there, it's on $10,735 when he went to click it close. Right. This man just showed him making a $10,000 trade, and some idiot gonna say, but you said buy side liquidity was coming. Who cares what a trader wants when the market shows you what it's going to do? You trade what you see. And all because earlier that day he made a post saying I want to say he made a post earlier today saying something about um yeah, 1542 to 442 to 450 looks suspect, right? I wanted something long, but right. And then he came back and was like saying, hopefully today begins. It was something here like, I'll come back later. I'll come back later and try to get it, right? Um, anyway, he said something about he wanted to come back and get it. I don't know where it is, but I said all that to say people are so caught up in being right, right? You said buy side liquidity was coming. You totally ignoring the fact that the man just gave you a breaker entry to make a $10,000 trade. But because it wasn't attacking the buy side like he said he wanted earlier before FOMC, right? Before FOMC, he said after FOMC, I'm gonna see if the market let me go get this buy side. It didn't give that. So he took a short, right? But people are so caught up on wanting to be right, they ignore what the market is showing them. They ignore what the market is showing them. Just and that's why I was saying, get out of what you got in your head. When he was at, hey, I got in my head that, get out of what you got in your head and go with what the data is giving you. If your data says do this, then do this. If the data says do that, then do that. Shout out PDub. PDub made a post. PDub made a post today. How do I get to my channel, my thing? I can't see where. Let me see. Reply. Is it under replies? Right here. Right. Right here. PDub said FOMC. First move always fake stop run. but it's the intended direction. First stop runs, secondary move is the setup, the final move coming back to the initial stop run, right? First move is always a fake move, stop run, but it's the intended direction, right? Secondary move is the setup, is to set up the final move coming back to the initial stop run, right? That's how PDub say it. He say this all the time. ICT say FOMC is a two-stage event, right? FOMC is a two-stage event, right? You're going to have a fake move and you're going to have a real move, right? So FOMC started at 2 o'clock. So here we go at 2 o'clock, right? The press conference is at 2:30. Here we go at 2:30, right? So from 2 o'clock to 2:30, what did price do? Price shot down and went up, right? Shot down, went up. What is this right here? Boom, boom. What is that? That's a Judas swing. What is a Judas swing? Right? When you hit them with the 52 fake out. 52 fake out. Right? So what is this 52 fake out? You come down, anybody who's a breakout trader, they got short soon as we broke this low. Breakout traders got short soon as we broke this low. Boom. Right? Come up, leading people the wrong way and punish the breakout traders. So now the breakout traders are taken out. The Judas swing, when does this become a Judas swing? When it comes up and rips their head off, right? Why? Because the Judas goat, I know that's a sheep, the Judas goat is walking. This is the slaughterhouse right here. This green line right there, that's the hatching in the slaughterhouse. So the Judas goat, soon as it get right there, the Judas goat peel off. And all the little lambs, they're dying along with everybody who got short here and put their stop loss there or there. So the Judas swing right there. So FOMC, fake move, real move. In the words of ICT, in the words of PDub, FOMC, the first move is always a stop run, but the intended move. Stop run. Second move is the setup for the real run. The Judas swing is the setup for the real run. Two different people saying it two different ways, but they saying the same thing. Just like John got a gospel, Mark got a gospel, Luke got a gospel, Matthew got a gospel, got all these different gospels, but they all talking about the same thing. So it ain't about being right. It's about what does the data tell you? You put together your rules based off what the data tells you, based off your model that you have back tested, and then you just execute. Based off of how does ICT know that? He back tested it. How does PDub know that? He back tested it. Did they say anything about 15 minutes, an hour? What? No. They stated their model by thing. So if your model has a specific time frame that you need to trade in, a specific time frame you need to stay away from, a specific time frame for anything, that's what you do. Other than that, forget about what's up here. And I'm talking to myself when I say this, not just you. This is the stuff I tell myself every day. Every day. I'm not reading that last dissertation you got down there, CZ. I ain't even gonna hold you. That's all I got, man. I appreciate y'all for hanging out with me hanging out with me for an hour and 20 minutes. Sorry for holding you for so long. It's 9 o'clock on a Wednesday night. Is it Wednesday? Yes, it's 9 o'clock on a Wednesday night. I appreciate you for being here. You can be anywhere else, but you here with me. Um, do me a favor, man. Let your loved ones know today that you love them. Don't just say it. Don't just show it. Say it, show it, and confirm it. One of the worst things in the world to do is be loving somebody with all your might and they not receive the love you're trying to give them because you're not speaking in their love language. Figure out what their love language is so that you can express it in a way that they can receive it. Right? Go in the next room right now. Hug your spouse, hug your kids, tell them that you love them. You know what I'm saying? Take advantage of the day. If your parents are still living, your parents still here with us, man, call them up. Say, hey, mama, hey, daddy, how you doing? I was thinking about you. Go by and wash your mama car for her. Go take out the lunch. Go take out the trash for her. Go do something. Let her know that she's appreciated. You are appreciated. Let them know, man. Even the little furry pets. Let them know that you love them too, man. Do that for me. Do it for yourself. Don't just do it for me. Life is too short. Nobody's promised tomorrow. You feel me? Hey, man, till the next time I feel like getting on Al Gore's internet, y'all be safe out here in these trading streets, man. Big Spider gone.